Hello, Circle of Nine community. This lecture is going to be about OSAKA time model for the Asia models. Now, this is closely aligned with Model 11 if you were to compare it to other models, as well as the Aries model or Model 33 for the yearly session. As we understand, there is a fractal nature not just with price, but with time as well. And we see that again for this specific session. So each session is defined on the x-axis, and Asia opens at a certain time and ends at a certain time. Now, when you're utilizing these models, and the way they create these models in these times is based off the x-axis, how much time is allotted in a specific interval. So you can do it on the day, aka Asia, London, New York, you split them up. Then you do it on the week and on the year, right, as we talk about. Eventually, you're going to get a fractal nature, and the moves and I don't want to use the word patterns, are going to repeat. And you're going to start to see the similarities, if you haven't already by now, in just the fractal nature of everything. So Model 11 is in many times going to act the same way as OSAKA. It's going to act the same way as Aries and or Model 33 on the yearly session. Now, in most occasions, it's either used for a continuation or reversal of the previous Asia time model, Damasu, which is the betrayer, or Judas, and or it's used for manipulation. So you get that. I'm going to use the term V-shape just because it's easier for people to comprehend. In a sense, it's a manipulation based off a power of 3 for a specific candle, whether it's on the 1 hour or 50 minute, but it looks like a V. So it's a V-shaped recovery, whether it's on the sell side curve or the buy side curve. The actual time fib interval where this takes place for this specific time model in the Asia session is 0.1125 to 0.36, as the book states. Now, again, you can use this for futures and on specific days of the week, occasionally Thursdays on most occasions. You will see Asia have larger moves, but my strong opinion is simply utilize it for Forex and crypto more so than futures. You can definitely use it for futures if that fits with your schedule. However, a strong recommendation is to utilize it for crypto or Forex instead. Now let's get on to a few examples of what to look for. I use a live example here as of this date of recording, May 12th, 2024. Here we're experiencing a volatile move. I'm not going to even check if there's news of that sort, but it's on the Forex pair, Japanese yen and the euro, JPY euro. And here we have the beginning of Asia, right? Then we have Damasu, just starting that little bit of a sell side move. Once we reach OSAKA, which begins at 1901 and ends at 2114, we then reach the inner interval, which is in a fractal nature, the 0.1125 of this time model right here, okay? Then price stalls out, okay? So here, what happens? If you're seeking, you can use this in many different ways, right? And obviously, I always mention you must understand the higher time frame. You cannot simply just jump into the 1 minute chart and expect to be extremely accurate knowing where a price will go. It makes it a lot easier if you observe higher time frames, and there's no shame in that. So here we have a little bit of a tiny market maker sell model, a little bit of a distribution model. We take out sell side here, okay, at the lower end, but we know that's the potential draw. So let's say you notice Damasu is starting that sell side move down. And this is an example of a continuation and a reversal all in one. So here we have a continuation of Damasu. OSAKA slows down that move in this interval here. Then what happens here? Let me zoom in. We go above the respective root candle, 1937 here, for OSAKA, right? Then we see price algorithmically just repriced to that multiple times until it distributes down. But the moment price according to time, wants to distribute down, it's already decided when it's going to do it. It might slow down a little bit due to time scaling. It's just how the algorithm works, but it already decides at what time where it wants to go. It stalls out at certain times and it decides where it wants to go at certain times as well. Here, it already decided at 1949 it wants to tag into that draw liquidity. So, not to get too detailed into that, but that's basically what's happening. So if you were looking for a short, maybe you look for an SMT with a different forex pair as more confirmation, right? Or maybe you're simply utilizing a higher time frame fair value gap. There's a SIBI here, and or maybe a 15-minute fair value gap if that's what you're looking at. Essentially, there's one right there as well. Okay, so we can use the old Gann box method for a better entry. So we draw that 15-minute SIBI. Then we proceed back to the 1-minute chart for a proper entry with time. So let me scoot that over, or actually it's perfectly fine there. And ideally, as mentioned, if you have not seen that video, I just put it out as of this date, you're going to want to see price hold this area. It doesn't mean that it's not going to happen, it's just the probability decreases if you see price start closing above here, okay? But this is the 15-minute SIBI right here. Now, you find an entry within that Gann box, and if you want to draw it properly, I'm just going to scoot it over here. You're going to use it for the fractal nature. So we have our time fibs as well on the time levels. And here we're going to look for the 0.1125 of this. I don't recommend always doing this, but I'm just saying you can, and it just shows the fractal nature. So now we're getting really fractal. We're in the 0.36 and the 0.5625 of OSAKA, right? Then we draw more utilizing the same numbers, and here we have the 0.1125. So in 1952, price just magically drops down. Then we see a bump up at 1959. Then again, 2004, we see a move down and a continuation. So it's just a little Easter egg right there. Nevertheless, the main idea is look for draw liquidity and the root candle. And always understand that the root candle dictates, and there's many utilizations for it, and I'm going to make another lecture for it. But the most basic one is it distinguishes between premium and discount of the respective time model. So here we have that, right? It goes in a premium. That's your opportunity to short because you know the draw is down there. Now, when it comes to time, at 2016, price slightly after, a minute after, reaches that sell side level. So here we're seeing a nice consolidation phase. Okay, maybe there's another SMT right here. I'm not going to check, but that could be the case. Then, if you're looking for a possible reversal, again, zoom out, understand the higher time frame. What's the narrative? Are we bullish? Are we bearish? Can we see a move back up? We do have engineered liquidity, sell side low resistance. Buy side low resistance liquidity way up here. Then, when it comes to Asia, we have our respective root candle. Okay, so it's 1807. And we also have this nice buy side level and probably a couple more buy side levels up here. Right before OSAKA ends, we get a massive move up here. And this is live, so I'm just using this as an example, but it's a perfect example here. Price goes, takes out all the shorts here. And then towards the end of OSAKA at 2114, we're now beginning the next time model, which is Kyoto. We see a move down. Okay. Strange timing, but this is an example of a continuation of Damasu and then a reversal last minute, which is rare. I'm assuming there's some sort of news event here. If not, then I am incorrect about that. But nevertheless, the timing is impeccable. And that's just one way to utilize it. So it's a continuation trade, right? You understand the draw, it goes in a premium, and you're using time to follow that. Let's look at a different example. So here we're seeing the V-shaped recovery that I mentioned, the manipulation, right? It's just like Aries. It's just like Model 33. It's just like Model 11. Now, again, the main point of all of this is you have to understand the higher time frame. So I'm going to simply go to the 15-minute, the 5-minute, and we understand that price has been consistently bullish. We have seen a higher move up, a larger move up. We take out equal lows here. So occasionally when that happens, people think it's a double bottom when it comes to the retail psychology of that aspect. And then once the equal lows got taken out, we can then utilize either two methods. You can use open high low close on the 5-minute, or you can simply use a larger time frame PD array. So you can check to see if there's a BISI, there's an order block right here, etc., etc. Now I always talk about the 5-minute just because it gives you that better entry when you coincide it with the 1-minute chart. And here we see that. So you can wait for two things. Okay, this is the V-shaped recovery that I talk about all the time. And let's pretend here, let's say, you know what, maybe we're looking at the weekly session here. Maybe we're looking at a Scariot right here. If you're up to date with the time models, you would know that's the Judas of the weekly session. And then we're looking at Aries right here. You would know it's model 11 of the weekly session. And then we get that V-shaped recovery, as mentioned in several videos, back up towards the equal highs right here. But this is the funny part. We're not in the weekly session. We're not in New York. We're in Asia. Now, the reason for this fractal nature, I'm not going to go too in depth in this one video, but I like to leave little Easter eggs here and there. You have to think about the logical aspect of this. Why would whoever's programming this, let's say there's not just one, but there's several algorithms all trading and competing against each other using high frequency trading. Why would these patterns, these timings repeat? Why is everything fractal? Why is it when you see this for Model 11 or Model 33, you also see it for Asia in Osaka, and I haven't made a lecture yet, but you'll see it in Bishop as well. Why is that the case? Well, when you have an algorithm and you have these set parameters, not just for macro, but for micro, all it does is set it across a specific time frame. It's a time series, okay? And when you plot data and time intervals, it does it across a certain allotted time, a certain x-axis. So all they do is define those x-axes. And then once they're defined, they just input the same algorithm. I hope that's understandable. So if they decide, okay, for the year, we're going to inject these times using these numbers, they're going to do the same thing for Asia, the same thing for London. And that's simply just how it works. Now, for this example, I know I went off on a little tangent there, but for this example here, you can go about several different methods of entry. Either way, you can use the 1-minute if you know exactly what to look for there, or you can observe the 5-minute. We got a beautiful inversion, but that takes 4 candles. So if I were to draw that in green, takes this candle, that candle, that candle, that candle. And if you want to wait for a complete closure, then 5 candles, right? You're using a total of 5 candles for this setup. If you want to minimize the amount of candles, simply just focus on 3. This setup here. We take the low, equal lows, then what would you look for? You're still going to observe the body here. I talk about it all the time with open eye close. It's in the book too. Once you close above it, the probability of price continuing to push up is higher. Okay? So again, you're going to want to enter below the close at the very least of this candle here, this bullish candle. So it wicks back towards that equal low level. And you can look for an entry there. So this is a perfect example of a V-shaped recovery for Osaka. Price then takes out the equal highs left during Damasu, and then magically it decides to reverse at the specific time right here. But if we were to go back to the 1 minute, what's actually happening here? There's equal highs, but there's also this root candle, Damasu. It's just like the 953 candle, right? It gets left there as a sort of liquidity grab. And price reprices back, ticks to that level for some reason, cannot make it past that level for whatever reason. Don't ask me. You tell me. I mean, at this point, it's happened almost every day, but that's just a potential draw, right? That's another way to use root candles. I'm going to say that for a different lecture, but there's actual several ways to use root candles that I haven't even talked about. But that's a perfect example of a manipulation for Osaka, just how you would see on Aries, right? And let's say there's an example, and I'm going to look for it, of time distortion for Osaka. Okay? When that occurs, as mentioned in the other lectures, what are you to expect for the next time model? You're to expect injection of volatility. So here's another example of a V-shaped recovery within that manipulation range for Osaka. Surprise, surprise. And then it goes back to that Damasu root candle yet again, okay? But I'm going to simply look for a potential time distortion example. And if I can't find it soon enough, I'm just going to pause the video and look for it. This is another example of the V-shaped recovery for Osaka time model. And here we have several opportunities. Either you can continue to short above the root candle for Osaka, the 1937 root, and proceed towards that sell side move, or you can target this V-shaped recovery towards the buy side level, right? But this is an example of time distortion. There's some beautiful opportunities here for longs and or shorts, but let me paint this white and you'll see exactly what I mean. Comes in one way, messes around, takes out both sides, seek and destroy, and pops out the same level, which is what? The root candle for Damasu in Asia. You see this happen in New York for Model 11. You see this happen for Aries on the weekly session. And you see it happen for Model 33 on the yearly session. You see it happen for Bishop on the London time models. Time distortion is real. It's a thing. And they do it for several reasons. And the way they go about it is utilizing time scaling, depending where they are at on the x-axis, depending which model they're at. But this is a perfect representation of that. So when you see time distortion, as I mention all the time, it's really, I'd say, what's the right word? It's interesting to note, right? Time distortion, it's pretty interesting. But how would you utilize it? Well, expect an injection of volatility once the time model is over. So if you see time distortion here for Osaka, what should you expect for Kyoto, which is the next time model, different lecture? An injection of volatility. Random time, it starts reversing down towards sell side. Beautiful market maker sell model right here. So this is an example of time distortion, and it doesn't always happen. You know, in most occasions, it's just a continuation and or reversal of the previous time model. But for Osaka and other time models, you do see time distortion occur. Okay. I hope this lecture gives more insight into the Asia time models and how it can be used on crypto and Forex. God bless.